Hey everybody, good morning. Infinity, Don, Eric, Sergio, Jan, Gary, Svenborn, David, Dan, excuse me, Craig, Rex, Darren, Larry, Donald, Jason. Hey everybody. Guess I have to compete with SpaceX this morning. Um, their rocket is just about to go, I guess. If you want to pop over there and watch that, that's fine. The recording will be here when you get back. And PPI popping off this morning, causing a little bit of volatility. That's producer price indexes, or producer price index, excuse me, and the numbers right here. Core PPI coming in a little hot. Core retail sales coming in a little light. I kind of speculated we would see light. PPI, you know, this is all in the parameters that I thought we were going to see. And I mean, what can I say? I thought we would see retail sales coming in light. I thought we would see PPI coming in heavy, but it's all within the range. They don't give me a year over year on PPI, but it's just in that resting range. I mean, they were expecting a 0.2. They almost always. I mean, look at all those 0.2, 0.2, 0.2, 0.2. That's like the guess. I mean, 0.2, and you get a 0.3. Okay, so what? I mean, that seems to be the standard guess is 0.2. So, anyway, now retail sales, again, like not a major change. We've kind of settled out at a relatively flat retail sales, and there's not much else I can really add. Unemployment claims came in 209, which is basically probably a complete farce. We've seen the numbers getting revised like crazy on the jobs and on the. I mean, it's all bull crap. It's all bull crap, and that's that's all I gotta say about that. I mean, you can't rely on these numbers to trade on. Why do I talk about them? Because the mainstream media loves to talk about this stuff. They love it. It's like, like crack cocaine. Got to talk about it. Got to get people invested. But in reality, it does nothing for us as traders. I mean, just causes a little bit of volatility, but the volatility tends to shake out in the direction that we're trading anyway. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, intended to be informational, educational, fun, entertaining, is not a recommendation to buy or sell anything at all. Don't buy stuff from me. Don't buy stuff from gurus, so-called gurus, unless you trust them. Make sure you trust me before you buy anything from me. Don't buy stocks. Don't buy options. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't buy treasuries even. Don't long them. Don't short them. Don't trade them. There is a substantial risk of loss if you do any of that stuff. And you'd be like, treasuries, I thought those were safe. Yeah, and except for the U.S. going into a debt spiral, which, we're well on the way. Last month, I talked about this yesterday. Last month, February 2024, spending twice as much money, the government spending twice as much money as they brought in receipts. Yeah, there's a bump in April, when taxes are due, but yeah, that's like one little bump a month, one little bump a year, while we're spending twice as much the rest of the time. Not sustainable, not sustainable in my view. So anyway, if you desire personal financial advice, that's not what I do at all. You need to hire and consult a financial advisor. Make sure you trust them. Also, I mean, let's face it. Most people out there, anybody you hire to do anything, pretty much out there, is just trying to make some of your money into some of their money, one way or another. Now, I'm not excluded from that, but I want to make sure you trust me before you do that. The link is in the description. If you want to go further, it's like $5 to get the market roadmap line. You might be like, what the heck's the market roadmap line? It's this orange line that shows up on the chart here. And I teach you how to use it and all that sort of stuff. So anyway, look at the futures. We got some volatility. We were up overnight a little bit as we came in and turning a little sour on this PPI number here that hit at 8:30. Turning a little bit sour here. So, we kind of drifted up from the close yesterday. Overnight, got a little bit of volatility. And, I mean, well, right there was the close yesterday. Right in. Let's see. Yeah, punch down, closed right there, drifting up overnight, and then retracing it. So we're almost back to a flat open. That's the basic goodness alerts. I think my family was messaging me. Anyway, almost back to a flat open. So we'll see what happens here in just a few minutes. You know, the market opened about 9 more minutes, and you know, not a lot happening. Now, that's the S&P. We were kind of ramping up, making a higher high there, but not higher than what we had last week on March 8th. Now, in Q, different story here. This is significantly lower and significantly lower again. This is starting to look like we may be building into a bigger downside. Look at that, 618. We came up 618 again, turned down. This is not looking too, as I say, Finborn give me a hard time. You know, I say no bueno. That's Spanish, means not good. This is not looking very good. And that was a 3-wave up. Look, 1, 2, 3 wave up right into the 618. And I don't know. Hey, Kimberly, I see you in the chat there. My lovely wife, Kimberly, came to say hello. Such a great supporter. Anyway, there's a support zone. Look where we've kind of triple bottomed right there. If we get below that zone, probably cruising on down. Probably. Now, obviously, there were some buyers coming in right there over the last couple of days. Yesterday, I guess. And, you know, some buyers here the day before. Pull that on over. You can see. It's kind of funny. That zone, there were sellers as we came down there. Turned into buyers, 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 buyers. If we crush down through it, watch out below. We made an initial move down, hit the 618. Another move down, hit the 618. This is stacking. This is stacking the downside potential here. Be very careful at this point. If we break down below this support zone that I kind of drew in here, this bottom of the channel, and we've kind of been operating in a channel. Got to pop up to a daily chart. Zoom it back up. Yeah, let's just zoom it like this. See, we've kind of been in this channel for all this year. Just kind of bouncing between the top and the bottom. Now we're hanging in the middle, and we're setting up on the smaller time frames. We're kind of setting up something that's looking a bit more bearish. If we get below the bottom of this channel, you know where the target is, right? For those of you that have been here, those of you that regular viewers, right there. Roadmap line first, stop. That's a daily roadmap line. So we're all the way down around 16.5. Now, why am I looking at NASDAQ over S&P? Well, S&P has muddied this pattern up as I started out. Like, we're not quite doing the same thing in the small time frames here. We have a divergence between them. This one rocking up higher, getting near the all-time high. But NASDAQ here doing something substantially more bearish. Substantially. We've held a 618 retrace right there. Held a secondary, smaller 618 retrace right here. This is a warning sign. If you ignore the warning signs, that's when you get caught off guard. All right. That's why I look at these 3 different indexes. They show 3 different stories. Russell, though, is aligned with that story that we're seeing on the NASDAQ. So 2 out of 3 are telling the same story. That's a story for watch out. We could get a swift, fast downturn in the market. Now, Russell, this is small caps. You may be like, Russell, I don't know Russell. That's IWM. You know, NASDAQ NQ is QQQ, all the derivatives of QQQ. And then, hey, it looks like SpaceX taking off there, maybe. And got it playing on my phone. Here we go. Now, ES, different story. Russell, bearish. NQ, bearish. So that's kind of telling us we got to be very careful right now. Now, Russell has a ways to go. Roadmap line way on down here. Way on down in this zone right there. And IWM right here. If you were going to trade this, 190 initial target. But look at the way this thing topped out of the 1272. We could be looking at a bigger, deeper retrace. And this could carry us on down. If we don't hold this 175-ish area, we could be looking at extensions all the way down here, 150, 130. Could be wicked on the downside. Wicked. So be very cautious. This could lead to a bigger, deeper retrace and a prolonged correction in the market. I'm just watching out for the warning signs, all right? CO, this one's got me super excited this morning. Yesterday afternoon, actually, started to get me a little excited. If we can break through that resistance zone, we're probably very quickly going to be coming up to this 83 area, if not moving on up to the 87 area. So this has got me hopeful. I know, don't trade on hope. That's a big thing. Like, don't trade on hope. Yeah, looks like we're rocking on higher there on SpaceX. Getting close to separation. Yeah, still going. It's funny, I can watch that and do this. So oil. Now, if you want to play oil right here, UCO. Look at this, getting close. Pre-market 31, 32. That aggressive entry above 32. More conservative entry above 34 on UCO. Now, that's leveraged. Be careful on leverage. I'm telling you, like that. A little bit dangerous to play the leverage. That can cut both ways if it starts failing. Now, my targets, though, look at this, 37, 39, 42, 44, 48. I mean, we could really climb this fib ladder on up in here. And since this is an ultra, that means it's going to move bigger percent-wise than what we see in oil. It all starts with a breakout of this consolidation that we've had for freaking months and months and months. So I bought a position here. I stopped out and I got back in. I stopped out down here, got back in, right in here. And I'm not full position yet. I'm probably going to wait for that move up through 32. And UCO is my preferred way to play. Now, another way, unleveraged, USO right here, United States Oil Fund. Another way to play. Lots of great targets on the upside. And we may have a resistance up there at 83. I don't know if I have this drawn properly. Let's see. Let's go ahead and delete that. Grab the fib. That high to that low. And we're broken above the 618 there. So that gives us 70+% likely we're heading up to this 84.90, possibly 90 up here. So this is a big potential play for oil here. Looking pretty darn good. Looks like it's been pretty successful so far on the SpaceX. Pretty cool. I'll have to go rewatch that when I'm done. All right, gold. Different story here. I really wanted to see that bounce and go, but it looks like we're going to get a third move down. Or third wave. We got a initial move down, a retrace at this point. Held that 618, pushing on down. This can lead to a little deeper move. Could come down into this zone right here, which would be fully back testing that kind of breakout zone right in here. I definitely want to see that hold if we're going to do that. If we're going to test that zone, definitely need this to hold, not get on down in here if we're going higher. Upside target 2214, 2230. Ways to play. GLD, GLDM, GOL. Let's see, what was the? I'm trying to remember. No, that's not right. Let's see. SGOL, that's it right there. That one supposedly has completely audited physical gold. If you're concerned about GLD just being paper gold, this one has audited physical gold right there. They do have a, let's see, what was I was trying to remember the carry cost. I can't remember. Expense ratio 0.17. GLD expense ratio. Come on. Go. There we go. Expense ratio of 4. So quite a bit higher on GLD for the expense ratio. If you're concerned about holding these long term, the expense ratios do matter. That's 0.4%. You're going to lose just to paying the fee to manage this fund, this ETF. I don't trade ETFs a ton, and usually I go for leveraged ones. Leveraged gold, that sounds kind of dangerous. Gold moves big as it is. So I don't have a big chunk of money invested in GLD. I have an ounce of gold's worth, but I do have a bunch of this one. This is Newmont Mining right here. I have $60 calls out to 2026. You may be like, that's kind of crazy. Yeah, but it has a huge bounce potential if gold gets rocking and rolling. So just throwing that out there. Getting a bunch of alerts firing off. Build-A-Bear, look at that, breaking above the 618, setting us up for 32, possibly 35. You probably want to go out a couple months on that one, several months maybe, or buy shares. Nice potential. Oh, actually, that target goes up even a little higher. 32, 35. Yeah. Nice potential. Really nice potential. Nice three-wave. Yeah, beautiful. That's a beautiful setup. That may be actually let's see. Double check a couple time frames. Not a weekly. Check the 3-day. Oh, beautiful 3-day bounce. So a little bit longer time frame than a normal daily bounce. But look at that candle go. Must have said something nice on earnings. That's really sweet right there. Could go higher, but 32 and 35. That's the upsides right there. And looking at Bitcoin. Getting a little chop here at the top. The upside targets right there. Right up here. 76, possibly 82 above that. We'll see. We've got these resistances. These target zones right up there. And then right up here. May take us a few days. We're kind of grinding it, pushing a little higher each day. We could get another one of these big candles by the end of the day. This thing just up and moves. So it looks like a successful launch from SpaceX. Pretty cool. We're going to cruise for about 30 minutes before we splash down in the Indian Ocean. That's the plan. So anyway. All right. Ethereum. Not sure on this one. We could get a retrace, rebuild up some energy before we break on out. We're still like hanging 19% below the all-time high on Ethereum, whereas Bitcoin's pushing all-time highs. And this is so Bitcoin's got a couple things going on. You may be like, why? I'm getting this question a lot. Why are the miners not performing? Well, rewind. For the last year, I've been saying that miners are going to retrace into the halving. All right. Now, I've said Bitcoin's likely to do it too, but right now we have a different dynamic playing out. I can talk about it briefly. Now, Bitcoin halving. Now I got some questions yesterday for my daughter included. What's the halving? The halving is the payout rate for mining a block of Bitcoin. And these blocks get mined right here. The transactions get authenticated into blocks. They get included in the blockchain, the chain of blocks. This is the chain that's been authenticated. When a miner, and these are mining pools listed down here, when one of these pools or any other miner, if we roll out here, there's probably some unknowns somewhere out here. Somewhere. if it's not part of one of the big pools, then it's unknown, and it'll say unknown. But most of the time, these pools have most of the hash power, and they win more often than anybody else. So when one of these pools, when a computer in the pool, you can imagine a pool being a large collection of computers, when they calculate the block, and it gets authenticated with all the transactions, they get the reward. Right now, that reward is 6.5 Bitcoins plus whatever transaction fees get paid for your transaction to get included in this block. There's some people paying $300 right there. $300 for those transactions to get included in that block, plus all these other transactions. So you get the block reward fee, 6.25 or 6.5 Bitcoins, 6.25, excuse me, 6.25 Bitcoins, plus you get the transaction fees. Now, when we get to the halving event, right here, about 36 days from now, block number 840,001 will only pay 3.125 Bitcoins plus the transaction fees. We're like, that's a giant, at $72,000, we're talking about, let me grab the calculator real quick. Pop it over here. $72,000 a coin, just round off, times 6.25. Talking about $450,000 for finding a block right now. That's going to drop down to $225,000 without anything else happening. No changes in Bitcoin's price, no changes in anything. All right. Why do people try to find these Bitcoin blocks? Because right now, if you find a block, if you mine out one of these blocks, that's a $450,000 reward, plus whatever the transactions are. I mean, that's pretty sweet. Now, the halving event cuts that payment in half. Now, how does the market balance that out? Historically, we have seen a massive rise in Bitcoin's price every time. And I did that wrong. Got to grab the all-time history right here. Historically, every time we've seen one of these in the past, here, let's rewind all the way back to the beginning. This thing's 15 years old if you aren't aware. It's all the way back to the beginning. Wanting to get a piece of this and putting more higher value on it. Starting all the way out at zero. Had the first halving. What did that do? Huge appreciation in price. Same thing happened. Price, the number of Bitcoins rewarded for mining a block got cut in half. Price responded. This happened again, right here. And we went through a crypto winter. We lost about 80% of the value. We ramped into the halving, a pullback after halving. This is 2016. Then price exploded to compensate that scarcity. Then we had a crypto winter, a giant pullback, lost about 70 to 80% of the value. Then we had some hype. Then we kind of made a big dip coming into halving. This one actually happened in front of halving in 2020. And then we exploded higher after the halving, compensating miners even more. Then we went through the crypto winter. We lost about 80% of the value. Once again. And this time, we actually hyped a little early. We're likely, odds are, we're going to see some sort of sell the news event. Now, I don't know if it comes down here. I don't know if we go rocketing higher. We get to some of these higher fib levels, and then we pull back from up there. I don't know which way it's exactly going to play out, all right? The other dynamic we have playing out right now is the fact that we got spot ETFs approved in January. Those spot ETFs are loading up, all right? They were brand new. They couldn't load up ahead of time. They had to be approved before they could load up. Now, the people managing retirement accounts, BlackRock, Fidelity, VanEck, you name it, Valkyrie, their mantra is to allocate 1% 1% of what they manage to Bitcoin. Now, IBIT is BlackRock's ETF, all right? Their assets under management, 15 billion in this ETF right here. Think about 1%. It's widely publicized that BlackRock has about $12 trillion of retirement money under management. Quick math, 1%. That's $120 billion. If this goes from $15 billion to $120 billion, it sucks up that much Bitcoin out of the pool. And there's only, we come over here, there's only 19.6 million of them out there right now. Only ever going to be 21 total. And you're like, what happens at the end of mining? We should be so lucky as to be here. It's probably going to take another 150 years before we get to the end, to that last Bitcoin mined out. It's going to be a while. So what happens when they load up with $120 billion of Bitcoin under management? Just 1%. Takes a huge chunk out of the supply. So we're seeing Bitcoin get locked up forever inside essentially forever inside these ETFs. It's going to become illiquid. That takes it out of the potential pool, out of the liquid pool, when they grab their chunk of Bitcoin to lock up. Think about it like the gold ETFs. They got to hold the gold. They're supposed to hold the gold to secure the ETF. These guys have to hold. So the whole point of a spot ETF is you have to hold the Bitcoin to be able to have the ETF. Each creation basket requires the purchase of Bitcoin, and they have a fiduciary. BlackRock's is Coinbase. Fidelity's is Fidelity. And there's the majority of the spot ETFs use Coinbase. One uses Gemini. One uses another one. Can't remember. And then Fidelity uses themselves. So this is all playing out ahead of Bitcoin's halving. This is creating some kind of spike. All right. We saw in January when the ETFs were released, we saw a sell the news. We're likely to see that same thing play out here. I also speculated that we would see FOMO as we got down to 45 days left. It actually started about 55 days left. And we went on this mega run that we've been on. And it may not let up all the way until we get to halving in about 36 days. So just keep it in mind, all right? We're going to see volatility. Now, why aren't the miners participating? Well, we now have these spot ETFs, all right? Used to be, before this date over here, for January 10th, one of the best ways to take advantage of Bitcoin's price appreciation was through miners. Now we have a different way to play, and we're seeing some rejockeying on how everything is getting positioned. I speculated widely that even without these ETFs, we would see some miners pull back in halving. That's kind of arguably what we've had happen here. We got a little pre-hype, get a little pullback, and its potential. And we touched the roadmap line there on Mora right around 17 before we find support and bounce and go. Riot also pulling back. Looks like we're starting to break down below the support that I needed to see hold. We may be on a path to go down to 7. Less awesome a chart than Mora. BTBT, same situation. We're breaking down $2 downside target right there, possibly even lower. And we're seeing lots of these. HUT, ever since the merger, it's been a pretty weak chart. Doesn't look very strong. We actually held the roadmap line from below. One of the stronger ones, CLSK, but this one's already starting to break down also. We may see a deeper retrace back to the roadmap line. This one's holding up here instead of down here like many of the other miners. Now there's There's tons of these guys. They mine Bitcoin. Now, in stark contrast, MSTR is not a miner. They do not mine Bitcoin. Do not get that confused. MicroStrategy dilutes their stock heavily, takes that money, and goes and buys thousands of Bitcoins. And I doubt it says anything about it over here, but they, last count, they held about 190,000 Bitcoins. All right, 190,000. So do the math on that. 190,000 times 72,000. $13.6 billion just in Bitcoin. Now we go look at the company financials. 28 billion, over half of their market cap, or about half their market cap, tied up just in the Bitcoin they hold. You could say that, people pricing in their Bitcoin twice, an appreciation for going up to 140,000 roughly. Price to sales, 59. Anything over 20 is ridiculous. All right, this company is not hyped up on what they do. You can see their debt they've taken on to buy that Bitcoin. At some point, they're going to have to sell some of that Bitcoin to pay off some of this debt. But if we go to 300,000, they don't have to sell off nearly as much to pay off the debt. So this company right now at these levels, dangerous. Could we go higher? Sure, higher. 2,000, 2,200, 2,400. I mean, we can keep climbing. But this is not a miner, so don't get it confused, all right? Got to keep it separate. They're kind of like a play on some of these spot ETFs. Now, if you want a leverage way to play, BitX, right there. If you think we're going higher from here, now, if you think we may get a pullback, be careful. Leverage cuts both ways. It's going to leverage come down if we get a pullback. It'll leverage go up if we keep climbing. You think we're going to double from here in the main price of Bitcoin? 140, 150? Not really a stretch at this point. I mean, 100,000 doesn't even feel far away when you look at how far we came. We were at 40,000 just back in like January. So 100,000 not far away. What is that? 30% increase from where we are. This one will go up 60%. It's a 2x. So 60% appreciation from 60. We're talking about upwards of 80. That will probably pop 80 if Bitcoin goes to 100. Bitcoin doubles. This one will double. Actually, it'll 2x. So it'll go more than double. All right. So that's the leverage way to play. Be careful on options, but that'll 10x your 2x, so you get 20x leverage. It's about the best you can do in the US right there. All right. Dollar. Still testing the bottom of that box. It was a support box. We broke down through it. Now it's a resistance box now that we're below it. If and when we break below here, we're probably going on down to at least the 99 area, if not on down into the mid-90s on the dollar. MSCR, we already talked about. DKS, nice pop. Dick's House of Sport. They built a giant, they took over a Sears building, one of the old Sears locations in the local mall, and built something they call the Dick's House of Sport. And it's got all sorts of batting cages and whatever else. I don't know. I've never been in there, but big pop there. And you can see the support. Like, look at that resistance level right there. You see how I tested it once, twice, 3 times, 4 times, 5 times, and then explode out of there. So looking at the biggest retrace over here. Coming up above the 1618, 250 280, maybe the next upside resistance zone areas right up here. At some point in time, we're going to hit the end and do a retrace. MDGL, it's a biotech pharma. Be careful there. KRTX, another biotech pharma. Netflix, it's got a ways to go to push the all-time high. And we may get a retrace back to the roadmap line to build the energy to go test that and or break through. Dollar General was getting a little pop. Now it's getting a little drop. Retracing back out. Looks like they had better earnings numbers than Dollar Tree and Family Dollar yesterday. You know, DLTR getting shot out of the sky. Support zone right there. If we can hold it and turn higher again, that'll be very long-term bullish on DLTR. We could be looking at a move up to 179. So that one looks like we're going to keep grinding a little higher. We do have a big resistance zone on that gap down right there. We're just coming up near it. Here, HEAR, Turtle Beach. Man, that's a sloppy chart. Sloppy chart. It's right up into the gap fill. See, gap down right there. Trying to push above that. Looks like the next level is going to be somewhere right around there. Up around 18. Not a huge mover. PDD. Keep looking over at the SpaceX feed. Looks like they have lost the signal as the ship comes around. And PDD just churning into the roadmap line. If we can break above this zone, well, I need to adjust the zone just a little bit. Pull that down to the lowest low. We came down and hit. This is a perfect market roadmap. This is, not market. This is a perfect echo trade. This move and this move were perfect echoes of each other. If this breaks back above, it's almost an entry now, an aggressive entry. More conservatively, you could look for a move up through this prior high. Then we're probably heading on up to 164, possibly 178. Pretty strong there. NVO. Busted out. Can we get the extension? Maybe. If we don't hold it and we come back in, watch out below. Hood. Pushing up higher. This is one that's been curious to me because they actually hold almost as much Bitcoin as MSTR, but they don't hold it on their balance sheet. So it's going to be customer funds, maybe? They don't admit whose Bitcoin they're holding. You know, before the spot ETFs, it was speculated that maybe they were going to be a fiduciary for one of the spot ETFs, but they're not. Nobody claims Robinhood is their fiduciary for Bitcoin. So they're holding a large chunk of Bitcoin. It's curious to me. We did this move. This is looking kind of like a corrective move up, which is dangerous. We need this to extend on up here to 24, 25 area to get continuation higher. For this party to keep going in hood, we need to see a move up in there. Holding here, that makes these moves basically an echo of each other, and we can see a sharp reversal down. Not what I want to see, but this was a strong breakout, retest of the trend line, move up, retest of the roadmap line, move up. We just need continuation. And then we get a retrace, and that we can keep going. RTX, nice kind of potential move up here, and we need some continuation up, get above all this consolidation that we've done for a couple years now. Not great right now as far as opportunity goes. NVIDIA, what goes up probably going to come back down. Is it today? Is it tomorrow? If we do a bigger retrace in NASDAQ, this one's probably going to lead the charge. Watch out. That level is going to be down here around the roadmap line, somewhere in the 570 area for initial support. It could be where we consolidated before, right back here. But we could also cruise on up to the point where NVIDIA is the largest company in the land. If we do that, I would watch out for a large retrace. Microsoft and Apple have held that top spot back and forth for a long time, like 20 years. We're seeing NVIDIA climb this ladder really quickly. If they take over the top spot, be careful. We've seen GE do it before. We've seen ExxonMobil do it before. We've seen Cisco, the routers, not the food company, do it before. None of them held on. They all plummeted after reaching that top spot. That would take the S&P, if NVIDIA does that, it'll probably take the S&P on up to about 5,500 in my estimates. Just doing some rough math, we'd probably be up here. That's possible. Is it probable? I don't know. If we get a large retrace, delay of game, and we may come back at it later. I don't know. Lennar getting slammed a little bit. A revisit of the roadmap line would be expected. FUTU roadmap line would be expected. Look at that resistance we've built up there. 1, 2, 3, 4, 5, 6 times rejected off of that. If and when we break out above that, we're probably going to go on a mega run. It's probably not even going to slow down at these levels. And we could go on up there to 160 pretty quickly. Let's see. SPRB. Whew. That's why that right there, key reason why I say be careful on biotech pharma. It was humming along, looking fine. Boom, right back down to the bottom. Bud getting a little retrace today. Big retrace today. Oh, come on now. I don't like that downtrend. If we can break above that, be very encouraging. I have some lofty upside targets on this, up around 85. I am long from back here in some leaps. Need to break out through that downtrend of highs in the more immediate time frame here. Not much else to add. Oh, excuse me. Not much else to add at the moment. PGY. Well, that's a reverse split. Reverse split's not bullish. And the downside continues. Probably going to head for that lowest low. Reverse splits are a desperate attempt to keep your stock listed. All right. You only do that when you have to keep your stock listed. That's not good. Not good for shareholders, and they tend to dump your stock, and that's probably going to make a lower low. VRM, vroom vroom. Look at there. 1 for 80 reverse split. Same situation. Reverse splits are not bullish. We did the split back here. We dropped lower. I don't know. They carry huge loads of debt. Losing, I mean, that's losing $47 a share. That's, I mean, that was, you know, $62 a share. How long can they stay in the game? Only a $30 million market cap. How much cash they have? Cash equivalents. And they're not even valued to their cash because their debt. Look at that, $1.3 billion in debt. with 289 million in cash. I don't know what they lost last quarter, but 90 million last quarter. I guess we could look at it on the earnings report. Yeah. Losing 90 million a quarter, you only got 300 million to go. You only got 2.5 quarters ish, or you got to figure something out. Backs against the wall. There was FSR, Fisker, reportedly going to have to file for bankruptcy protection once again. 16 cents. Watch out below. That's probably going bankrupt. Probably the end of that one. I would dare to venture and guess. ALB. Man, that one just keeps grinding a little lower, a little lower, a little lower. Target's right down here, maybe down into 88 area to find support somewhere down in this zone. Then maybe it can find some sort of bottom. USD, Ultra Semiconductors. If we see NVIDIA pull back, that one's going to drop pretty viciously. SWIN. There's a retrace to the roadmap line. If we can hold it, that's bullish. If we don't hold it, not so bullish. And the way that popped up off the lows, I would be very careful that we don't see a retrace all the way back down to this 3 to 5 area. Somewhere right back down here. Could very easily see a retrace that high. Looks a lot like, look, that's the same pattern, right? Just different numbers over here. Same pattern we see on like this guy, SMCI. Everybody sees it, right? Ignore the numbers. Look at that. Same pattern. That one's a little smoother. Same pattern as little jumpier on this one. Same pattern. Probably coming back down. EDU. Nice grind. A revisit of the roadmap line would be expected, but upside resistance. We may go test it first. X. United States Steel. Battling out with the regulators, trying to get their deal approved. Gapped up, gap back down. Looks like the deal not going through. Yeah. They should just give it up and let Elon have the X ticker, right? Elon should just buy it out, get the ticker, and then sell what's left. KNTX or KNTK. Popping up, resistance, and probably going to come back to the roadmap line. That's just a choppy sideways piece of rough to trade stock. Be careful. That's not the kind of thing that I like to get involved in because there's no clear anything here. It's just been bouncing right off the resistance, finding support back down here. Not even a wide range, just a couple bucks. Difficult to make money off of. Sentinel 1, coming back to the roadmap line like I drew. Bottom here, top here, support zone right in here. Watch for this to hold. If we can hold that and bounce up, get back above this, probably heading on up. And those targets at this point, if we got down in there, maybe 33, 37, and we could go bigger targets above that. All right, there wasn't a ton of stuff on the list today, and amazingly, I filled the whole time. So S&P bias for the day. Watch out for the correction. Watch out for the correction. Looks like we're doing the more bearish thing that the big tech's kind of showing us. This is a cautionary tale. And right there, we're breaking below that support. Going down in a blaze of glory. Watch out for support at the bottom of the channel for NASDAQ. If we get below that, roadmap line becomes highly likely. Highly likely. All right. If anything I said was helpful, beneficial, informational, give me a thumbs up. I appreciate the like on the video. And questions, I'll be in Discord the rest of the day. I don't have anything else scheduled, so I should be around. I am working on new stuff, trying to come up with new things for you all the time. If you want to support me, link is down below. Click the more button on the description. $5 get you the market roadmap line. And I'll be back. Same bat time, same bat channel. 9:15 Eastern tomorrow morning. I'll be back live. Have a great day, everybody. Looks like SpaceX launch was successful, and I'll have to go catch up on what happened. So have a great day, everybody.